session. Reliance Capital declared numbers, good set of numbers. The stock is up 2.5% as you can see. The management is now joining us. Sam Ghosh, CEO at Reliance Capital. Sir, firstly, congratulations on a great set of numbers. Can you just give us the highlight of the quarter? How did the housing finance business do? How did the AUM business, that's the asset management business, did in the quarter?
Yes, so if you look at overall, Reliance Capital showed a profit of 235 crores, up 10% on last year same quarter. And the businesses obviously contributed to this profit. The main businesses contributing to this was our asset management business, which showed a profit of nearly 140 crores, up about over 15%. And AUMs also have grown quite significantly for them. Their AUMs are at over 1,56,000 crores, up quite significantly at over 20%. And the second business that has also contributed to this is our commercial finance business. That includes our housing finance that showed a profit of about 112 crores, up about slightly up on last year. The AUMs have grown about to 22,000 crores, up over 20%. Now the profit has grown slightly compared to that. The primary reason for that is that we had tried to grow our housing finance business at a significant growth rate. So housing finance has grown at about 62% growth on AUM to about over 7,000 crores. And we had to expand our branch network, so we increased some costs. However, going forward, this will all translate towards more profitability for that business. In our general insurance business, we've shown 5% growth in terms of profits, 15 crores. So that has also helped with profit growth, and though gross written premium has remained flat. And on the other business that has helped is our broking and distribution business, which had shown a small loss in the previous year, now has come to break even.
Right. Housing finance business, does that continue to be in a sweet spot, and does that continue to do well?
Yes, so in the housing finance, as I mentioned, we have grown, our AUM's grown to 7,000 crores, up nearly 62%. Our focus is that how do we take that to about 10,000 crores in this financial year, and then obviously to grow at a much faster rate in the next financial year. For that, we had to obviously set up entire infrastructure. We have now about 90 points of presence across the country. So we've gone into smaller towns. Our focus is on affordable housing. Especially, we continue to focus on the self-employed segment. So we're still away from the salaried segment. That also is a huge opportunity for us in the future to target the salaried segment. And if you look at in terms of net interest margins also, net interest margins at about 4.8% for the housing. If you compare that to our commercial finance, that though it's at 5.7%, but this is more steady and will continue to grow at a much faster rate. And the gross NPLs are below 1%.
Right. So as far as funding at Reliance Capital is concerned, you have raised a lot of money via selling stake. Will that be pumped into the housing finance business because that's in the sweet spot?
No, see, if you look at on the housing, first of all, in terms of capital that is coming in for both the life insurance stake sale as well as the asset management stake sale, the funds will actually come in this quarter, hopefully in February and March. So the funds haven't as yet come. But once the funds come in, certainly the 3,000 crores that comes in, of which part of it will go towards the housing finance company and part will go towards retiring debt for Reliance Capital. Now, if you look at the housing sector, as you mentioned, obviously there's a lot of competition in the market. But our focus remains clearly on the self-employed and the affordable segment. So affordable homes, so we are getting into that, and we're getting into smaller towns. So there, competition is not that great, and the opportunity is still huge.
Right. As far as the asset management business is concerned, it led the growth, but markets have not been that great. They have been in turmoil in the last, at least in the start of 2016. How would you view that?
Yes, if you look at overall our AUM as of 31st December was 1,56,000 crores, of which 51,000 crores came from equities. The balance came from debt, and nearly 30,000 crores of the balance came from retail debt, and the balance was long-term debt. See, we continue to focus on the long-term debt aspect where funds still come in at a very fast rate, and we are one of the bigger few players there. On the equity front also, our focus has been on systematic investment plans whereby customers invest monthly with us. We have nearly 14 lakh systematic investment customer folios, and they continue to grow. And that also income is fairly steady. Where there's been a slowdown has been in where people come in and invest on an occasional basis. So those type of customers have slowed down a bit, but I don't expect that to have a major impact. However, if you look at in terms of AUM, we are at 1,56,000 crores. Today, as of 31st December, we expect that we should be above 1,60,000 crores for the whole year.
Right. So just a last word as far as flows are concerned from the start of Jan. Any update on that front? Does do overall flows continue to be good? Because it is really not that great feeling if you're an equity investor.
No, see, our flows continue. The flows have decreased by about 10 or 15%, but that doesn't mean that flows have slowed down. And as I said, from a SIP, systematic investment point of view, those systematic investment plans, those customers continue investing on a regular basis. It's only where the slowdown is where individuals coming in and giving us lump sum money. They have slowed down. I think they are also, and they're also, some of them are moving the money to the debt funds. So debt funds continue to receive the money.
Sam, thank you so much for taking out time for us, and congratulations on a great set of numbers. Reliance Capital up 2%. Markets are also looking strong. Reliance Capital numbers were decent. We're taking a break.